Good morning, everybody. This is Wednesday, October the 9th. The reason I say that, I'm getting ready to do a review of the Momentum self-storage deal. I mentioned this yesterday. This popped on our radar really quick. This is a deal that we kind of rejected 3 weeks ago. And what happened was these operators, Nikki and Guy, they're very nice people. I've met them twice. When we rejected them, they kind of went back to the drawing board and said, "We want you guys to be involved with this, and we want to build a relationship." Um, I met them in Orlando about, I guess it was 4 or 5 months ago, and I just saw them a couple weeks ago out in Portland, Oregon. They're Avestor clients as well. They offer what I'm going to show you are the numbers they're offering to their retail investors. So I'll tell you a lot of times that we do better than the people that go directly to these investors, and I'm going to show you that. First of all, this is their pitch deck to their investors. So the numbers are off. I'll just say that the numbers are going to be better than this. Um, and because we're coming back into this deal so late, we need to wire them money um, October 17th. So today is Wednesday. That's why I say this is Wednesday the 9th. So if you like this deal, um, I need you to start getting ready to fund by mid next week, because then I'll have to turn around next Thursday the 17th and wire to them. And listen, this is I don't want anybody to be in a rush to do this deal, but this is one of the best self storage deals I've seen. It's not just the deal; it's what these guys are willing to do. So they came back to us and said, we'll give you a 90-10 split, which allows me to make a little bit of money for the fund, but also lets me give you a big majority of that as well. So I'll show you exactly what those fund economics look like. I'm not sure I'll be able to show it in this video, but let's go ahead and get started. You can see these Guy and Nikki live in Iowa, and that's where these 13 properties are located. These are part of a 15 or 16 property portfolio. They rejected two or three, so they took the best 13 that they like. It's 1,238 units. They're proposing for their retail investors an IR of 16 and a half to a little bit better than two equity multiple, pref equity of 6. It's paid quarterly, and it's about a 5-year hold. So just realize these are all projections. We don't know how things are going to work out, but self storage is one of the most reliable out there. The rents typically just kind of hold steady or go up just a little bit. It's vacancies where you capture, and it's management costs where you capture the gains in these. And so that's what they're attempting to do over 5 years, and we're going to see that. Again, this is their preliminary pitch deck. Excuse me. Their preliminary pitch deck. So most of this is about self-storage in general, and I'm not going to take a whole lot of time. Most of you all understand self-storage. It's just very vanilla. It's boring, y'all. The funny thing that Guy and Nikki would say is, "Hey, it's a door. It's one door, and a bunch of empty space and concrete." So, our nation. If you look at this, you can just look around. We just accumulate junk. I mean, I don't have particularly, I don't use self storage, but maybe you do. More power to you, but I can't imagine why people. But I mean, there's a lot of reasons people like self storage. If you have toys, if you have RVs, if you have boats, you want to keep it safe, you want to keep it dry. Self storage is the only option for a lot of people. So, sometimes you can't put an RV in your neighborhood, you can't put a boat in the driveway because the neighborhood won't let you. So, this is their thesis of sorts. They invest in strong cash flow potential markets, long-term value appreciation. The reason I like this deal, and you're probably going to say, "What?" It's kind of in a sleepy market. It's just a steady market. Some of these tertiary markets, and they don't even know when a recession hits. People just keep trugging along. So here's the team. This is Guy and Nikki, their husband, wife, and that's the rest of their team. They're underwriters and people that help them get things done. And like I say, I've met Guy and Nikki. They're great people. Live out in Iowa, live near these assets. They're not going to self-manage these assets, though, which I thought was interesting, but they're like, we're not good at it. We're good at finding deals. We're good at putting the right kind of management in place. They've got a third-party management team that they love that is really good and efficient, and that's who they're going to be putting on this. I kind of thought you'd have to hire people to run these things, but what they're going to do is just the phones aren't really being answered. That's the issue they talk the most about, is the lack of management. And so they've tested it, they've secret shopped it, and they're kind of like, we can run this so much better and generate more income, fix this thing, and in 5 years, the plan is to exit. The cap rate they're exiting at is very conservative. It's higher than what they're buying at. I think it's really conservative. I think it's a 7 cap, which is maybe a whole point higher than it should be. Um, that's one way it's conservative. They have conservatively attacked the taxes, is another place where they feel like they're super conservative. And I like that because you don't want people throwing numbers out there that aren't achievable. I think what they're throwing out there is near the bottom of what we might see. Now, again, these are projections. We don't know exactly what they're going to be able to do, but I think that they're going to safely double our money in 5 years, and it could be better than that. Let's just leave it at that. And if things go really bad, I think they're going to make us about 60 or 70% on your money in 5 years, which is still a 12% return over 5 years would be 60%. That's still not bad, not what we aim for, but it's nice when you know where your floor is. Um, Not one of those deals like we did in the tech startup where it could be a goose egg. This is not one of those. You've got assets that you own, and self storage is good in any economy. I think when people are doing well, they're buying lots of junk. When people aren't doing well, and they're moving back into grandma or mom's basement, and they have to store stuff. So that's what most of this preliminary stuff is. Let's look specifically. Um, and this is some of their criteria. And I don't want to just blow through this, but I want y'all to get that. And I want to keep this video sort of short. They're raising 3.2 million. They're only giving our group that I'm with $1 million of space. So I want us to try to grab 1.5 to not 1.5, 150 to 200,000 of that would be awesome. I'm probably gonna do. I'm investing in this, but I'm also investing in the PAVE. If you're wondering about the PAVE, it's probably going to be delayed. It's going to be funded probably in November 11th, maybe the deadline. So if you're thinking about the PAVE as well, this is front and center because we only have 8 days on this one. They're raising a total of 3.2. Their pref return is 6. They're actually giving us 8, and I'll talk about that with you. Deal structure. This is owner financing. Owner financing at 6% on the 8.8 million. They get 2 years of interest only. In the third year, you're going to see our returns go down just a click because the interest only goes away, and then they have to start paying principal. Again, they aim to do the same thing that I do, which is double our money in 5 years or better. And that's their IRR and their equity multiple for their investors. Ours is a little bit sweeter. I think ours is 18 and a 2.25 for my investors. So we were able to get that. Um, this is their executive summary on this portfolio. Again, these numbers aren't really ours, but they are. The biggest thing they need to do is get the expenses around 30%, 35%. If we're going to make the numbers we want to make, they've got to get the expenses under control, and they've got to increase the occupancy. And I think they can do it. And so I trust that they can do it. They've got a track record that's really, really good. I don't know if I'll be able to show that on here, but here are the facilities. 7 of them are in a town called Boone. I have no idea where that's at. Granger in Madrid, Huxley, and I do know where Ames is. That's where Iowa State is. That's a college town, but there's only one facility there. Here are 3 of the facilities with concrete, very nice gated communities. I think some of them do have gravel, so they don't all look that nice, but those are nice self-storage. I think those are great. Again, this is how when you get out into rural America, and you see that around here in Tennessee as well, you just see a sign that with a number. And so when people call that sign, they'll send that. Sometimes they'll just send the application by email. They'll e-sign that application. They'll tell them which unit's theirs. Then they show up and bring their own lock. Um, Management of these type is not that hard. This is not the kind that has to have a full-time business. They're not selling boxes and staplers and tape, packing tape, and stuff like that. So that is one of the drawbacks of this self-storage deal. But this is just the meat and potatoes self-storage deal. Um, here's some of their sources. They're actually, the purchase price is 11. Of course, they're raising 12. About half of that's going into capex. They're going to have to fix some doors, paint. They're having to fix one of the spaces. They've got working capital in there. This is fees that they were initially charging us. We actually got that knocked down quite a bit as well. So more of that is coming to us as investors. Um, Here's our expense revenue stuff. Pause this if you really want to study this. We've looked at their expenses and revenues and have underwritten it pretty hard. And like I say, we think that one of the worst cases, like a 12% annual return on our money. Um, Financial projections here again, they're showing their investor, the deal as a whole. I want you to see this. The deal as a whole makes a 2.49x. They're going to give us a two. We're going to, they're giving us so much share of this that we're able to give investors a 2.25. So they're not making. Now realize they're raising 3 million. Just the million that they're giving us, these unbelievable terms. So the other 2 million they're raising at these terms here. So don't think, how can they give away 90% of the deal? They're only giving away 90% of the deal on what they're doing for my group. So that's the relationship. The power of relationships gets you these better terms. We're almost, we're costing them money to do business with us, but they like us and want to develop a relationship. And being able to raise money fast, like we can do, is a huge bonus for them. So they want the relationship. Again, here's the limited partner returns. Ours are a little bit better than this, but year one, um, if you invest 100,000, you probably only get around 5 or 6,000 that year. Year two, it goes up. You're getting about 7,500 that year, and they're, these are totally, um, I don't want to use a speculative, but these are projections. We're around that $7,000 mark year three because, like I told you, the debt service goes up and that eats into it. But by year five, when we're looking to sell, we're going to cash flow. If we sold on the 60th month, we'd be receiving a good cash flow, and then all the money would come back. So that's not depicted here. I'll try to depict that later. So this is the Momentum Wealth Fund. These guys are awesome. I like them. I'm investing personally in this deal. The minimums are 50. You definitely, if you're going to use a self-directed IRA, we need to get started on making sure your money's there. And I'll have this up on Avestor hopefully by the evening. It's not there yet, but I wanted to get this video out to my investors so you could see the Momentum Wealth Fund self-storage deal. This one fell in our lap really quick. We negotiated a lot better terms, but unfortunately we only have 8 days to fund this. So again, I'm just trying to find 2 or 3, 4 people that want to do this, and we can raise our 150, 200,000 and get into this one. And I think this is a great place to park some money. If you're looking for strong cash flow, this isn't it. There is cash flow in this, but there are better deals for cash flow, and I'm looking at those still. Some of you who are retired and wanting to derive income from your money, that's something you should be looking at. This is just something to park your money to make sure that it is in a good, safe place and a strong asset over the next 5 years. So hope this video helps you guys. I know there's more I can share with you, and I'll be getting that up on Avestor and getting that out as well. Hopefully we can get a webinar with Guy and Vicky, but I'm not sure we're going to have time to do all that. But this hopefully give you an idea of the deal, and maybe you can make a decision whether you want to participate or not based on this. And I will get you more information. All right, everybody have a great day. Thanks.